Yeah, so why don't we go through this using Blackline, a company that you said has scored one of the highest scores. So I think it'd just be really interesting to go through that.
Sure. And again, this is the reason I invented the checklist. So, and just a word of caution before we even start, my checklist is specifically designed to find low risk, high growth, quality compounding machines. So you can actually run some great businesses through here, and it might not score well just by the nature of what I'm looking for. So that doesn't mean that it's not a good business. It's just not specifically what I'm looking for when I see it. But so with Blackline, when I plugged it into my list, man, did it check a lot of boxes for me, and we'll see that. So all right, so Blackline is a company, is a software as a service company that's focused on continuous accounting. You hire Blackline, and it makes the financial close and account reconciliation much easier. It automates a lot of processes that are done manually. So that's like the thesis behind the company. So it operates using a software as a service model, and it's the top dog and first mover in its industry, definitely. In many ways, it's almost creating this industry from scratch. It's not like they're competing against any other company. What they're competing against is people emailing themselves Excel files. Like that's the market they're trying to disrupt. But let's start at the top. Okay, financially, when I look at Blackline, I see tons of cash and no debt. So that is a 5 out of 5 in terms of the balance sheet. When I look at Blackline, I see a gross margin that is very high and has consistently risen over time. That is a 3 out of 3 for the gross margin. But I see, next thing I check is returns on capital. So I want to see return on equity, return on assets, return on invested capital. Ideally, these would all be double-digit numbers and growing. Blackline hasn't fully reached scale yet. It is producing adjusted profits, but it's not yet producing GAAP profits because it's not yet optimized for profitability. Therefore, these numbers are all positive, but they're low. So I give it a 1 out of 3 on that one. In time, those could get up to double-digit range, and I think they will. But for right now, it's just a 1 out of 3. Next, I look at free cash flow. Is free cash flow positive and growing fast? The answer there is yes. So that's a 3 out of 3. And the third thing is earnings per share. Are earnings per share positive and growing fast? The answer there is yes. So 3 out of 3. So on the financials, the max score that you can get is 17, and Blackline gets a 15. That's really good. All right, so that's financials. Next is moat. So I think that Blackline's competitive advantage is its switching costs. Once you get Blackline into your system and your accounting department gets used to training on it, you are going to be loath to switch to another provider. And Blackline has all kinds of software integrations with other leading software products that makes it easy to pass data back and forth. So I gave them a 15 out of 15 on switching costs. Once a business hits 15 on any metric, I just stop. Yes, this company has a moat, and you could also make an argument there might be some brand to it. There might be some minor network effects with getting on there, but I'm not giving it any points for that. You've got me on switching costs alone. So 15 out of 15. And then there's the moat itself. Is the moat stable? Is it widening or is it narrowing? I went a little conservative here, and I just said it's stable. I gave it a 3 out of a potential 5. You could make the argument that as they add in more integrations and grab more customers, they're widening their moat, but I gave them a 3 out of 5 on that one. So they have a wide moat, and it's at least stable. That's 18 out of 20 on the moat category. All right, next is potential. So does this company have optionality? And again, optionality is the ability to launch or create brand new products or services within their current industry or outside their current industry. Well, for right now, they're focused on continuous accounting. I don't see any big time optionality for them to enter a brand new market other than what they're doing. I would love it if they proved me wrong, but for right now, I think that all of their optionality is within launching new functions and new features onto their current software program. So I give that a 4 out of 7. The next one is organic revenue growth. What's the company's organic revenue growth rate? If a company's growing 15% or more organically, I give it full credit, and they are. So that's a 4 out of 4. Are they the top dog and first mover in an important emerging industry? Yes. There's no doubt about that. I give them a 3 out of 3 there. And do they have operating leverage ahead? Operating leverage is when the business has the ability to grow its profits faster than it grows its revenue by scaling the business over time. There's no doubt in my mind that there's tremendous operating leverage opportunity ahead. So potential, they get a 15 out of 18. So pretty good. Next thing I looked at is the relationship between the customers and the business. So is it expensive? Does Blackline have to spend a lot of money on sales and marketing to acquire customers? Yes, they do. It is very expensive to bring a new customer on board. So out of a potential 5, which would be you spend no money on marketing and you get them, or 0, which is you spend a ton to get one customer, I give them a 1. So I want Blackline, that's one downside to software as a service companies is they have to expend heavily to acquire customers. However, once they become customers, their demand is pretty much recession proof, right? If a recession comes along, they're going to kick Blackline out. No, that's one of the benefits of software as a service companies, or at least good ones. So I give them a 5 out of 5 on there. So when it comes to customers, Blackline is a 6 out of 10. The next thing I look at is revenue recurring? Definitely. That's a 5 out of 5. Is there pricing power? Could Blackline increase prices by a few % each year, and would customers defect? I doubt it. I think that once you get into their offering, you're going to stay with them. So I also gave them a 5 out of 5 on that. Up next is management. Who's the CEO? Well, for a long time, the founder was the CEO. Her name is Therese Tucker. She has since moved on to become the chairman of the board, and she hired somebody to be the CEO. However, she is still involved. She's on the board of directors, so I'm still giving her full credit for being involved in the company. I love it when founders are running the show. If not a founder, I want the CEO to at least be a long tenured, 10 plus years at the company is ideal. That's a 4 out of 4. Inside ownership here is very high. The CEO could because the founder is still involved. That's a 3 out of 3. The company gets good Glassdoor ratings, not perfect, but good. So that's a 3 out of 4. And the fourth thing I checked there is the mission statement. I want a mission statement to be simple, inspirational, and optionable. Blackline gets a 2 out of 3 for me there. So that's a total of 12 out of a potential 14. Finally, we're almost done here. Finally is I look at the stock itself. I want to see that the stock has thrashed the market over the last 5 years. And if there's not 5 years of data, I want to see that it's beaten the market since it IPO'd. I'm a big believer in winners keep on winning and losers keep on winning. So I want to buy stocks that have already beaten the market. This company has smashed the market. It's up many hundreds of percent. So 4 out of 4 there. Next thing I look at is, does the company buy back stock, pay a dividend, or repay debt? Does it use capital to make Wall Street happy? In this case, no, it doesn't do any of those things. So I give it a 0 out of potential 3. And then the last thing is, does it regularly beat its earnings expectations? Does it regularly smash Wall Street's targets? Over the last 4 quarters, Blackline has beaten the top line of the bottom line 4 out of 4 times. So I give it 4 points there. Add all that up, and we get an 84 out of a possible 100. And an 84 is a really good score.
Well, great. Thank you for going through that. Really interesting. And I love that you talk about Blackline. It's, not maybe a household name, continuous accounting, something that a lot of people other than a controller of a company probably doesn't think about a whole lot. So that's really helpful. And then how many points were against it in the gauntlet?
So that's up next. So we have our 84. That's like all the good things. And an 84, again, is a really good score. So then I go down the gauntlet. Okay, number 1, any accounting irregularities. Boy, would that be an embarrassing thing for an accounting company. So 0. And the best that you could do here is 0. That like a 0 is a really good score. Number 2, is there any customer concentration? Blackline has thousands of customers, and no customer is more than 1% of revenue. So good. So that's a 0. Number 3, is the industry being disrupted, or could it potentially be disrupted? I actually think Blackline is a disruptor in the industry. It's not being disrupted. So that's a 0. Number 4, are there any outside forces? Does it need a strong economy? Does it need a high stock price, interest rates, commodity prices, any of that stuff? Nope, none. It's a 0. Number 5, is it a big market loser? Has it lost badly to the market over the last couple of years? Nope, smashed it, 0. Number 6, is there a binary event ahead? Is there some kind of patent protection that's going to come off? Is there some kind of legal ruling that's going to go against the company? Is there some court case that the company could lose that busts the thesis? Nope, none of that, 0. Number 7, is the dilution extreme? I consider extreme dilution greater than 5% annually due to stock-based compensation. If it's between 3% and 5%, I'll deduct 2 points. If it's more than 5%, I'll deduct 4 points. And if it's less than 3%, I'll deduct 0 points. In Blackline's case, their dilution is less than 3% annually, so that's acceptable, 0 there. Number 8 is the company's growth through acquisitions, or is it all homegrown? All homegrown. This is all organic growth we're talking about, 0 there. Is the company's financial statements overly complicated? Like, do you have to have a CFA to understand what this company is talking about? The answer there is no. They're pretty straightforward financial statements, so I give it a 0. Whereas a company like Solar City, when that was public, it made my head spin to try and understand if that company was doing any good or not. Number 9, are there antitrust concerns? This is mostly for the Visas, MasterCards, Amazons, Googles, Facebooks of the world. No, there's no government agency calling for Blackline to be broken up. That's a 0. Is there any headquarter risk? Blackline is headquartered in Los Angeles, 0 risk there. And finally, is there any currency risk? That's a 0 because Blackline, the vast majority of Blackline's revenue is done in America. So Blackline gets all zeros across, which means its final score is 84. On my system, anything over 80, I ask myself, why don't I own this stock? Like, it's that good of a score. They're very rare. So 80 is always a, man, do I need to give this company a hard look. If it's between 70 and 79, it's in my investable range, and I would bless buying it. I might not own it for whatever reason, but it's in my investable range. Anything below 69, I almost never buy unless there's something really special that I'm excited about or the potential is especially huge, for example. But this is why I created the checklist. It's like, if a company gets a 62, that doesn't mean it's a bad company, but there are companies that get 80s. Why wouldn't I just put my capital behind the ones that have 80s? So that's Blackline top to finish. And hopefully you see why it's such an awesome company.
Yeah, well, thank